Hello traders. Welcome to your Follow the Bots S&P 500 Daily Market Recap, sponsored by Zaner. Since 1980, Zaner has been helping futures, commodity, and forex traders trade smarter, faster, and easier.
Hello, I'm Bill Duryea with Follow the Bots. Welcome to today's Daily Market Recap. A detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Tuesday, July 9th, 2013. If you've had the opportunity to follow our broadcast, you know that this week our forecast called for the S&P to auction back up to resistance at 1650. At the end of May, the S&P auctioned up to its new multi-year high at or near 1680. Price had pulled back during May and June and had held support at or near the 1600 price level. At the end of June and in the beginning of July, the S&P broke down below support at 1600 and auctioned down at or near 1550. The market recovered up off the low and traded above the 1600 price level. During the 4th of July holiday, the S&P auctioned above what had been minor resistance at 1620 and began its trajectory up to the next resistance level at or near 1650. The breakout above the prior high at 1620 occurred during the holiday. Initially, the S&P traded up to 1630. It pulled back and filled the gap at the prior day's close before retesting the high. The rally that began at the end of the week continued during Sunday's Globex session. On Monday, the S&P auctioned up to a new high at 1638. There was a minor pullback late in the day down to retest the prior high at 1630, and the S&P auctioned up off the close, ending the session at 1635. During Monday's after-hours session, earnings season began, with Alcoa reporting earnings after the close. Alcoa's earnings beat expectation, and that helped fuel the positive bias that rallied the S&P above yesterday's high and auctioned it up to a new high prior to Monday's open. The S&P opened Monday's session by pulling back off of the high and retesting Monday's high, trading down at or near 1638. Selling pressure ended on the pullback to 1638, and the market auctioned back to retest the high and made a slightly higher high, trading up to 1649, 1 point below our upside target at 1650. In yesterday's commentary, we noted how we determine our support and resistance levels. The unique thing about analyzing market structure and accepting the market structure as an indicator is that support and resistance levels are determined by the factual price levels where the market traded down to and held support, as was the case yesterday when the S&P pulled back down to 1631, and was the case this morning when the market broke out above yesterday's high overnight and pulled back at or near the prior day's high before retesting the high and trading higher. Along with our market structure algorithms that help us model the price development in the S&P futures contract, we also employ micro algorithms to help us read the order flow during the intraday session. As the S&P rallied above Monday's high during the overnight session and traded up to 1645, you can see that our algorithm detected selling pressure here at or near the high prior to the market pulling back down and retesting the prior high at 1639. After the high frequency initiated selling drove price down below the overnight high, when the S&P pulled back down to 1639, 1638 to retest support at Monday's high, our order flow algorithm detected sell programs waning on the pullback to the low. Following the confirmation that the selling pressure had abated, high-frequency buy surges occurred, indicating the likelihood that price would auction back up and retest the high at or near 1647. As the S&P auctioned back to retest the overnight high and traded up at or near the resistance target at 1650, once again we observed that buy programs were waning and high-frequency sell surges were occurring as price probed up to the high. The market development late in the day remained relatively narrow, with the S&P auctioning up at or near 1648.49 and pulling back only modestly down to 1646, 1645. The lack of buying interest observed today at the high could result in a pullback during the overnight session. The market is up now 100 points off its recent low, and we would expect to see the rally begin to lose steam as the previous shorts have all covered back up to the June 18th FOMC high. Coming into Wednesday's session, minor support exists at today's low. Monday's low at or near 1631 is a more desirable pullback level. The ideal support level is back at last week's high at or near 1620. That concludes our recap of the S&P 500 for this Tuesday. Thank you very much for joining us. If you would like to follow our real-time commentary, please visit us online at www.followthebots.com.
For more information regarding Zayner's brokerage services or the content of this broadcast, contact Neil Rogers, nrogers@zayner.com, 312-277-0135. This is Cuerva from Follow the Bots. Happy trading.